राजीव जी गुड मॉर्निंग।
गुड मॉर्निंग सर।
सर कैसे हैं? सब बढ़िया?
गुड गुड गुड, ऑल गुड।
अभी तो आपका मार्च एंडिंग की वजह से थोड़ा डिफिकल्ट हो रहा होगा सब, बिकॉज यू आर स्टिल इन प्रैक्टिस ना, लाइक एज अ सीए।
Yes, yes, but it's not any particular period that we get busy, so चलता रहता है मतलब we are
Because most of
fighting
the
all.
CAs are busy at the financial year end, na?
Hello?
So it's difficult to get them.
Yes,
Yes, yes, yes. Just a second, sir.
yes.
We'll start sharply at 12:30. That will be fine, na, sir. Okay, sir. Okay, thank you. Thank you.
रिजर्वेशन भी करना है इसके यहाँ जाने के लिए। 2 दिन की सीएम तो इसके मिल जाएगी।
Sir, Mr. Bisak is your colleague or?
Yes, sir. Vikas is my colleague.
Yes, yes, yes. Okay, okay.
Good afternoon to all, and all the participants joined today. How many participants?
There are now 21.
21. 22 is remaining, na? 21, but your startups are not joined all. No?
Startups all have not joined.
You take the attendance and
Yes,
call
yes,
them
yes.
to join.
Yes.
Good afternoon, Rajiv ji.
Good afternoon, sir.
Before introducing you, I will introduce myself to you. Myself is Dr. Ashok Kumar Bharimal. I am working as a scientist in CIRCOT for the last 20 years. Basically, my work is technology and this agribusiness incubation, and that some design regarding the agri machineries, agro machineries. So I am making a proud privilege to introduce here to my two startups who are already in the training program under this fourth cohort. Mr. Rajiv is a fellow member of Institute of Chartered Accountants of India, fellow member of the Institute of Company Secretaries of India, law graduate and postgraduate in commerce. Rajiv is also registered valuer with the IBBI category of securities and financial assets. Really, it is a very good qualification and is very much fitted for our program, what I found. Though I am a scientist, but my last 10 to 15 years I am working in this area, technology transfer and agribusiness management. So really, sir, your qualification is very much fit for our and will definitely benefit it. Sir, your current engagement is Rajiv is a practicing chartered accountant in Delhi, has expertise in goods and service tax, an active speaker with Indian Institute of Corporate Affairs. Very, sir, very nice. II, All India Management Association, AIMA, Divya Jyoti registered valuer organization, DJ RVO, and Institute of Company Secretaries of India, Faridabad. He has also conducted in-house GST training with various reputed organizations. Rajiv is providing this type of training. We also likely to conduct for our agri startups in future. Rajiv is providing consultancy to many reputed companies on various aspects of taxation and compliance, and his firm is providing consultancy in the following areas: tax advisory for direct and indirect tax, including international taxation, corporate legal matters, FEMA and forex compliances. His prior experience are he is having over 16 years of experience in various aspects of finance and compliances. He has exposure to manufacturing and service industry across all sizes of companies. He has worked with Indian and multinational organizations prior to be associated with the Slovenia Consulting Private Limited as director. Sir, really, your experience, qualification, and your experience is very lengthy. Definitely, this lengthy exposure will take the advantage today, and we are looking forward your help to ignite and to nurture our agri startups in future. With this, I am stopping here. Now, sorry, you start, and I am now giving this section to you. And dear startups, this is not only to listen to him, must listen to him, and in real time, you should interact with him, take his benefit and such a expertise. Okay, thank you, sir. Thank you.
Thank you so much, sir. Thank you. A very good morning to all of you. Thank you, sir, for providing me this opportunity to interact with the startup entrepreneurs. It is always a good experience to interact with the entrepreneurs and especially the startups, because they have a lot of energy and they have a lot of potential, and they are doing a great service to the nation. So it's always pleasure. And the topic is also very interesting one. And valuation is a very practical subject. Means whenever my friends and colleagues or somebody discuss about any complicated issues about valuation, so I always say that it's a very practical thing, and it is something which everyone knows how to do the valuation. Actually, if you go with the theory and you see the technicalities, how the valuation is done, so you might realize that there are a lot of technicalities involved, but practically each one of us understands how to do the valuation, because whenever we buy anything, we actually compare the price with the value that we are getting. So even right from the beginning, we actually understand the concept of valuation. So with this, I would Sir, can you, okay, I can share my screen.
Yes, you can share the slides.
I hope my screen is visible to all.
Yes, sir. Screen is visible.
Okay, so since we are talking about a very practical concept, and the audience is also very much connected with the practical side of the things, and that is why I would request each one of you that if you have any questions, you have any doubts, or you have anything to discuss, you can write your query on the chat box. I'll keep checking it, or you can intervene in between, and we would try to understand your queries. The objective is to take the learning, means as much learning is possible from today's session. Okay. So before I begin the presentation, I would want to ask a question from all the participants, that all of you are entrepreneurs, you are doing your business, you are having a startup ecosystem. As an entrepreneur, how do you evaluate your success? How do you evaluate your business? You might be evaluating whether your business or your startup is doing good, how good it is doing. So how do you actually evaluate the performance? So you can write your answers in the chat box, or you can unmute yourself and give your response.
Abhijit ji, Mr. Abhijit Malankar.
Yes, sir. I'm there.
Yes. Can you answer the question sir has asked?
It's for everyone. Anyone can answer. You all are entrepreneurs, and you all are must be evaluating your success. You must be checking whether your business is doing good or bad, or are you on the right path or not. So I'm just trying to have a vote here as to how is the entrepreneurs are evaluating their success. How is that they are evaluating their business? So we already have an answer by calculating sales with returns. So one criteria could be the sales and returns.
Sir, good morning. This is Dr. Sharda. And I would like to just say that we will depend upon the consumer's feedback, first of all, because ours is based on the printing, on the fabrics. And so we'll base it upon, the consumer's preference, consumer's opinion.
If you have a consumer satisfaction, the consumer feedback is good, then you feel that your business.
Then the quality of our own product.
So if you are able to maintain quality of your products or services, that is when you feel successful. You feel that your business is doing good. Very good. You're getting good response. One is saying,
apart from the consumer feedback, which is also a very important thing, I think ease of scalability can also be something which we keep in mind while evaluating, how the business might go ahead.
Yes. Ease of scalability. So how scalable your project is and how quickly you can scale. Abhi, gradually we will understand that all of you actually understand the valuation, and all of you can do the valuation. So another answer is cost of production with cost benefit ratio. So if you are able to reduce your cost of production, attain efficiencies, you are able to have better costing of your services or products, then that is evaluation criteria. How we are achieving various milestones. So milestones could be qualitative, quantitative, measurable, and we check how we are achieving those milestones, which could be turnovers, number of users, right? Any other answer? We have around 30 participants. We still can have more answers.
Yes, Mr. Anup. Anup ji.
Hello, sir.
Yes. So what you look to measure the progress of your evaluation of your startup? What exactly parameters you see for that? Can you answer?
Basically, I see what impact your business is making to the society, plus in return what money it makes. Ultimately, business means creation of wealth and the impact to the society. I think these two parameters I'm looking at.
Very well said, sir. So we have multiple answers. There are two unseen answers: SWOT analysis, percentage of profit, and increase in sales. So basically, as we have understood from this discussion, that all of us actually evaluate our business. All of us wants to be successful. All of us wants to attain objectives, and all of us wants to evaluate, which means value the success of our business. But the criteria of valuation or seeing the value could be different for different people. Somebody would be evaluating in one parameter, somebody else would be evaluating the business from a different parameters. So generally the answers which we get are like this only, that generally there are two kind of indicators that people use to evaluate their business. One is the financial indicators. Some of you might have answered about the financial indicators, and some of you might have answered about the qualitative indicators, and some of you might have answered both. So there could be a turnover. If my turnover is increasing, I am doing good, I'm successful. It could be profitability. It could be any other parameters of your financial, the assets, the cash flows. Those kind of parameters are used to understand the success of your business. Likewise, there could be a certain qualitative indicators which you use, like customer satisfaction, your quality, the product quality, and number of customers that you are able to achieve, number of employees that you are able to achieve or you are able to support. So there are so many qualitative indicators also which you consider while evaluating a business. But it is surprising that most of the business conventionally were working for the purpose of, for the goal, the objective of profit maximization. That was basically the goal for any business in the past, majorly. But as you have seen, you are a startup and you would have seen that as a startup, you have brilliant ideas, you have brilliant ambitions, and you understand the path to reach those, to be able to plan and execute those ideas. You are already in the process and you are already achieved some of it, but you understand that achieving those ideas, achieving those plans, doing what you want to do, you need money. So how this startups ecosystem works is that the person who gives you the money need a certain return on the money that that person is investing. That person could be your friend, or that person could be an institutional investor. So anybody who gives you the money needs a return, and you need money to achieve your goals. So your goal may be socio-economic as well. You might, your primary objective might be to make an impact over the society or somebody, but at the same time the financials are involved. Like for example, if I say the goal of my organization is to support the startup ecosystem, to if I see that because of me some businesses are able to do better and they are able to provide employment to many people, then that gives a fulfillment to me. But at the same time, I need to remain profitable. If I'm not profitable, if I'm not self-sustainable, if I'm not growing fast, then obviously I'll not be able to achieve my goal. So to achieve your goal, you need capital. The capital comes in different forms. The capital comes from different sources. As you already might be aware that there's a initial capital to be invested by the promoters. Some of you might have been able to raise money through seed round, through some of your known circle. Some of you might have gone for a series A, B or C. These kind of fundings you will be seeing in your life cycle. So your goal is to be able to achieve these kind of fundings in your projects. So how you are able to reach to those funding levels, how you are able to get the funding, and at the same time when you will be getting those fundings, how will you determine that what should I be paid for the value that I have created for my business. So that is a key question which comes, and many a times we have seen that the people do not get the funding because they are not ready for this question. They don't even know what is the value and how they can increase their value, or how they should be talking with somebody about the valuation. Because if the valuation is not clear to you, if you are not able to justify your valuation, or you are not aware about your valuation, then any kind of investment will not work for you. Getting investment or reaching any investment is any investment round becomes very difficult. I can see many participants are still joining right now. So
it's fine. Some of them had some technical issues, so they have.
Yes.
We can continue.
Yes. In case anybody has any question or any doubts, maybe catching up where we are, so they can raise your hands. So here the point of discussion is that we should be considering as value maximization as one of the important goal for our business.
Rajiv sir.
Yes, sir.
I want to be here to ask something to you. No, not just a guidance from you. Okay. Value maximization or profit maximization? Which is the fundamental rule of your financial management. But what happened in my experience, when the startup are going for maximizing their profit, sometimes they are get lost because of this maximization theory. Okay. So this is a good fundamentals, or this is a good message to our startups, any startups in India, because you know our culture of startup. Okay. This value maximization or profit maximization, whether profit maximization will guide them or value maximization will guide them. That is just I am putting before you. You just continue. This is my query.
Okay. Sir, basically what happens, of course, profits are also important for the sustainability of any business, but during the different phases of a business, the profitability is going to be different. So for example, if there is a startup, if the startup would target to become profitable, they might have to compromise a lot on to their growth and valuation, and they might not be able to achieve the size scale to be able to make the impact or to be able to fulfill the objectives that they have. So many a times, many a situation, depending on the cycle where the business is, the valuation becomes important. Of course, the profits also affect valuation. These are one of the indicators which affect valuation. So I'm not suggesting you ignore completely profitability of your business. That's not the goal. But profitability is only one part which determines your valuation. And there are so many other parameters which determines your valuation. And if you are able to achieve a good valuation, then you would be able to achieve a good investment also into your business, and you would be getting sufficient capital to be able to achieve your objectives.
Yeah.
So the point of discussion is try to focus on valuation also as one of the important goals while running your business. Because if you do not understand the concept of valuation, if you do not focus on increasing your valuation as an important goal, then you might miss some of your important business goals. That's the idea.
Okay.
I hope I'm making clear. Yeah.
If continue, then overall we'll see. Then we'll put people.
So in this session, basically, I would try to identify and discuss with you some of the parameters which you can focus in your business to be able to get better valuation in your business. So I'll just explain to you a few factors which you may focus upon in your while doing your business, and that will help you to get a better valuation whenever you get some investment into your business, with whichever series it is, but that will affect the valuation of your business. So although valuation is largely a number game, but there is always a story behind those numbers. So valuation is nothing when there is no story. So one important factor to be kept in mind is that focus on numbers, but at the same time, focus on all the qualitative factors in your business, which will differentiate you from the peers and which will give a better valuation to you. And you should not hesitate telling somebody about those qualitative factors and why is that you command a better valuation or better ratios than your peers, because your qualitative factors are better. So like, for example, there are two companies with the same size of turnovers or same size kind of business and everything, but one company has a better systems in place. Of course, you will get a better valuation. The company which has a better systems in place. The company which is more innovative in its offerings will get a better valuation. The company which has a better customer rating or better services will get a better rating. Suppose you have to buy a hotel and there are two hotels available on sale, and you check on Google which hotel customers are talking good about that hotel and what kind of ratings they have. Maybe both of them may have the similar kind of building and the similar kind of locality. The one with the better rating, better customer satisfaction, you would be willing to pay little extra for that particular hotel. So that's the reason the customer satisfaction or the systems in place in your company, the kind of manpower that you hire, the kind of people that you hire, and the kind of contracts or commitments you have with the people you hire, the kind of incentive system is in place in your organization, the kind of vendors that you are dealing with. Even it's these are all assets. These are all qualitative assets. If you are having a good ecosystem which is sustainable, that ecosystem is not only inside your organization, that good ecosystem is outside your organization as well. Even a consultant who is helping you to hire an employee, the kind of consultant that has that person is, and the kind of support you are getting, that all affects your business and how soon you are able to achieve your goals. Because if you are able to create a better ecosystem and a better environment, then that will affect your business. Second important factors that I want to highlight is you have to increase your growth. So I'll just give you an example that there is one company which has started its operations today, and just after 6 months, they have a turnover of, let's say, 10 crores. And there is another company which started 5 years back, and in the last 5 years, they were able to achieve a turnover of 10 crores. So the company one took 6 months to achieve a turnover of 10 crores. Company B took 5 years to achieve a turnover of 10 crores. Both the company have the same profits. Both the companies have the same same turnover and same profits. So when you look at those two companies, and you would want to anticipate their future, somewhere in your mind you would be able to see that this team is able to achieve from 0 to 10 crores in 6 months, which means this team is more aggressive, and it is quite possible that another 6 months they will achieve another 10 crores. So the growth is important, but the rate of growth is something which is very important. If you are only focusing on profits and that compromises your growth, and your growth is slow, that decreases your valuation. If you are able to grow fast, then your valuation is increased. If your past trend is such that you have been aggressive in your growth and you can showcase that you have a plan in place which can provide you a good, decent growth. Here, I would also want to highlight a point that the growth should not be done at the compromise of, the solvency or, the very existence of organization. So sometimes if you are not having any, sustainable plan for your business, then maybe that growth may not be sustainable. But here I would want to highlight that you have to consistently focus on growth. Don't slow down. Don't slow down because of your own, reasons that you want to go at a certain pace. Startups grow very fast, and that is how they command a valuation, and they need that capital to be able to sustain those valuations. So that is the second point that I want to highlight. Any questions so far? Anybody has any questions or any doubts about any of these points?
Yes, anybody has any questions? Kaushalji, you have any questions?
No, sir. No question as of now. I'm just listening carefully.
Okay. So even after the session, I will keep
May
some
I ask
time.
the question?
Yes.
What do investors value more? The value of the startup, or the prospects of growth, or maybe the team? What is it?
Okay. So although different different startups command valuation from different parameters. So different parameters could be that, of course, the value is generally into the future, not in the present. The present only gives you an assurance that what your future looks like. So if your project has a good growth prospects, which is evidenced by your past, that what kind of team you have, what kind of business you have done in the past, what kind of systems you were able to create, what kind of customer satisfaction you were able to achieve, whether your products or services are unique in nature, or you are doing something which is easily doable by others. Is there any intangibles involved? Do you command a very good goodwill? Your brand name is good. So all those parameters are considered by the investors while doing a valuation of a startup. Unfortunately, what happens that many a times the startups are also not aware about their strength and how they should market those strengths. And many a times the investors, especially in the seed round or the pre-series A round, the investors generally apply a thumb rule, and based on the thumb rule, they calculate a very low valuation for that startup. The startups are not in a position to negotiate much. They do not know the plus points, the positives that they should highlight in that meeting, and they many a times they dilute their equity at the initial stage. Too much of equity they dilute for a small amount of money. So the reason, that is why I'm trying to point out as many points as possible, which you can look inside your organization, that how you can focus and improve those points. And if you already are able to improve those points in your organization, you should be able to focus those points while commanding a better valuation for your startups. Otherwise, thumb rule, what somebody will say, they will say that, oh, look, your turnover is this much. 5 times of your 4 times of your turnover is the valuation I give to you. They don't understand that at that stage your turnover might become 10 times in a period of 6 months, or the scalability could be very different for your business than the business with which they are comparing your business. Sometimes it happens that you belong to a particular industry, like you belong to an agri industry, but the kind of work you are doing is very unique. You can't be compared with others. So those kind of situations, it becomes very, sometimes it becomes, I would say, very stupid that we dilute our equity at a very low rate. Sometimes somebody might come up to you and say that, how much you have invested so far. Okay, you have invested 1 CR. I will also invest 1 CR and let's become 50% partner. So those kind of situations arise at the seed funding or pre-series A round. But once you are able to reach to series A, B, series A round at least, then you would be able to command the valuation on all different parameters that should be considered. A professional valuation might be required in those cases. And a lot of information about your company gets into, developing a model which gives you a particular valuation.
Yes, Harish ji, you have any question? You raised your hand.
जी sir.
Yes, you can ask.
हाँ सर, एक्चुअली हम एक डिसीज आइडेंटिफिकेशन सिस्टम बिल्ड कर रहे हैं जो कि आर्टिफिशियल इंटेलिजेंस बेस्ड है। अभी तो हम एग्री में कर रहे हैं, उसमें इमेज रिकग्निशन सिस्टम हम यूज करते हैं। तो आगे चल के हम ऐसा भी कर सकते हैं कि वो ह्यूमन डिसीजेस जो है, जैसे कैंसर हो गया, कुछ और जो डिसीजेस हो गए, जिससे इमेज रिकग्निशन से हम आइडेंटिफाई कर सके। तो हमें ये, अभी तो हम एग्रीकल्चर का वैल्यूएशन कर रहे हैं, बट अगर हम वो सर्विसेज आगे शुरू कर सके जो ह्यूमन डिसीजेस है, तो उसको हम वैल्यूएशन में कैसा ले सकेंगे?
So basically what happens, very good question that you have asked, and in fact we have a similar experience with one of our clients. So there was a company in Israel which created a software which can be attached to the voice recognition machines, or wherever a person is giving command to the machine over the voice. And they created it for the automobile, means within the car, if you are you want to raise the volume of your music system or something, you can give commands and that will increase the accuracy of the verbal command. They initially never realized that they are not doing something which is related to automobile. What they are doing is a universal application. It can be installed in a lift. It can be installed in a vending machine where one can buy some goods. So likewise, when you are working on any particular technology, that technology might have multiple applications. So the moment you delink yourself to a single one particular industry, you can prove that your growth is going to be much higher than what other person is projecting. And the risk associated to a one particular industry is not going to affect you much. So for example, somebody might have a different perspective about the agri industry, but the person understands that even if although agri industry is one industry which is going to definitely grow very good, but if somebody has negative outlook about one particular industry, but your product has a bigger applications, you should definitely showcase that, and that factor will affect your growth projections, and the valuation is directly getting affected by better growth projections. The higher is the growth projections, the higher is going to be the valuation. The idea of this discussion is not to show you a valuation model and typical Excel calculations, which of course as an entrepreneur you might not need to know, and that is something which any professional will calculate and give to you. But what is triggering a good valuation, what you can focus on to your business and what you can use as a marketing or a negotiation point. So definitely if your technology is good and multiple applications, you will have a higher growth projection and you will command a better valuation.
Thank you, sir.
I can see Abhijit has a question. You have raised your hand.
Sir, this is Abhijit here from Unify Elements Pune. So what I wanted to ask is, for service-based startups, how exactly can we work on intellectual property creation? Because we initially during the start we are focusing on service based model. Gradually we might get into some products also. So and some part of the valuation is also linked to intellectual property for some investors. So how exactly can a service based startup create intellectual property?
Okay. So, sir, intellectual properties are of different types. It is not that only, technical know-how of, the knowledge of being able to produce something is the only intellectual property that we can have. So, like, for example, a manufacturing company manufacturing air conditioners might have intellectual property which, help them, the technical know-how or the knowledge that they have, which can so technical know-how or knowledge that they have which help them to be able to produce something, that is intellectual property. They might be having a patent of that also, but at the same time the brand name might also be a good intellectual property, because you have created as a service provider a sustainable kind of a consistent performance in front of your customers, and that brand is a good intellectual property. The kind of employee base that you have, the kind of employees that you were able to hire is a good intellectual property that you can showcase, that you can create as a service provider. So there could be the kind of processes that you are having is kind of an intellectual property. Hello, am I audible?
Yes, sir, you're audible.
Yes. So all those are also intellectual properties which you have created, and those intellectual properties will actually help you to get a better valuation. Of course, when your company gets an investment and the valuation for the company is done, many a times those intellectual properties are not separately valued. That value becomes part of your overall organization valuation, but many a times those intellectual properties are separately saleable also, licensable also, and many a times when you do the valuation, we can do the valuation under split method by doing these valuations separately. Like for example, for Infosys, their manpower is the biggest asset they have. It's not the laptops they have, it's the manpower. If today you have to hire and train so many people and make a system where they can do this kind of a work, that definitely is an intellectual property which commands a good valuation. Right, sir?
Yes, Abhijit ji, are you clear? Okay,
Yes, Abhijit ji?
Sir, I think he is having a technical glitch, so we can.
Okay. I hope he could listen to my answer.
Yes, it was crystal.
Yes. Okay. So these are various factors which we may consider. One could be to reduce the cost of capital. So I'll just give you a few examples. Like many a times I've seen that people start their business as a partnership firm, and they want somebody to invest into their business. So if I have to invest into your business, as a partnership firm, you want me to invest, and tomorrow you say that once it will become big, I will create it into a private limited company before an institutional investor will come in. Of course, one can invest into a partnership firm as well, but the liability in the partnership firm is going to be much higher. There is an unlimited liability. So I would expect a higher return on my investment, which means the cost of you getting a capital is increased, and you will get a lower valuation just because you have chosen a wrong business structure for you. So you are not ready for investment. Somebody will tell you that, okay, you can get a partner as a partnership firm also. No need to have a company. Why to increase compliances? But of course, the compliance cost was not that big. As big, you have incurred a cost because of getting a lower valuation because of a higher cost of capital. You might have borrowed money at a very high capital. you might have got a wrong mix of equity and debt. Too much of equity or too much of debt. Maybe some businesses are like, getting the debt as much as possible and the equity base is very low. So those kind of situations is detrimental to your valuation. So whenever you are doing some business, right from the beginning, try to maintain a balance in your capital and try to, obtain your finance from the sources which are standard or institutional one, and which can give a good credibility or, optimal cost of capital for your company. So that is another point which is important for any business to be able to have a good valuation. Any question on this?
Yes, any questions? Sir, we can continue, I think.
Yes. So another point is, I hope I'm not going too fast, because it's just a 1 hour of discussion. So I'm too excited to actually share as much as possible with you guys. So I might be going a little fast, but I hope that is fine with all.
Yes.
So
Yes.
another important point that I would want to highlight to the startup ecosystem is that we should be optimizing our investment. Like, for example, many a times we have seen that, people buy the things which they can easily get on lease, and they can do better with lesser capital. If your business is such that your capex investment can be avoided at the startup level, that should be avoided, so that you can walk a longer journey yourself before you would need any outside investment. Otherwise, what will happen? You would be starved with cash early, and you would need investments very soon, when you would not be able to showcase any achievement. So the idea is to be able to achieve as much as possible with your own capital. And when you ask for any investment, then you can showcase some achievements, and that is how you can command a better valuation. And if you command a better valuation, you will dilute much lesser. So if your valuation is, let's say, 20 crores and you need 2 crores, then you will dilute 10% of your equity, 10% of your ownership in your business. But if your valuation is only 5 crores and you need 2 crores, then obviously you will be diluting around 40% of your equity. So you should be conscious about your decisions in which you are deferring your costing, your investments. Try to work as with the clients where your money invested in your clients. Maybe your margins are less, but your money getting stuck with as a debtors or as a working capital cycle, that can be optimized. If you have some inventories, try to find out ways how you can reduce your inventory and can manage with lesser inventory. How you can make your team more efficient to manage with the shorter periods of managing the deliveries and managing the production or managing the things. So optimizing the investment is also one important key where we can add more value to our existing business. Any question on this, sir?
Yes, any questions? Sir, we can continue.
Okay. And the last point I have is focus on increasing the cash flows. So profit, of course, is one important part of the cash flows, because the higher is the profits, generally the higher is the cash flows. But focus on increasing the cash flows, whatever decisions that you are taking. The higher is the cash flows or higher is the cash flows projections, the higher would be the valuation for your business. So take decisions where your cash flows can be increased. The cash flows, the negative cash flow situation can be reduced, which will give you a better valuation. These are few indicators that I wanted to highlight for having a better valuation for your business. you have any question related to the valuation or investments into your startups, you can ask me, and I'll take up.
Yes. So,
Sir, I want to ask one question.
Yes.
Right. So, sir, I have a startup named Power Foods, and it's a registered partnership firm.
Okay.
And we've been operating since the last 6-7 years now, and we've been able to grow in the last 3-4 years at a decent rate. So now we are planning to get a valuation done and raise some funds. The only issue is that we have a private limited formed in 2019 in the name of Power Foods Private Limited only. So going forward, we want to basically, of course, as you rightly said, sir, we need to have a private limited company to actually get the funds from the long-term perspective. So will it be a good idea to transfer this business to the private limited company formed in 2019, or we should look to form a new private limited company? What would be your suggestion, sir?
Okay. So this is also a good question, and I have seen that this situation occurs very frequently with people, that when you want to start a new business, you actually do not know how successful it would be or how sustainable it would be. And startups, we don't know what will happen to that idea. And in that case, people try to avoid having, the mandatory compliances of a company, and we choose the partnership as the business model. So since in case of partnership firm, the first problem is that the liability of partner is unlimited. Yes. So you might get your first set of partners who will actually work together with you, so they are comfortable taking the unlimited liability. But anybody who is going to be a sleeping partner who will not be involved into your business would never be comfortable with the unlimited liability. If somebody will be comfortable, they will dilute your valuation because they will see a higher risk, but most of the times they will not be comfortable. Further, foreign investment into a partnership firm is not allowed. In case of LLP, it is allowed, but in case of LLP also, the conditions are more than a company. So ultimately, company is a solution. Now comes the answer: how you manage, how you will be able to convert your partnership into a private limited company. There are multiple ways of achieving it. One way could be conversion of that partnership into a private limited company, so that partnership itself gets converted into private limited company. Another way could be to transfer the business, the running business of that partnership firm into that company as a slump sale. So in that case, your existing company can be used to buy that business of partnership firm. Another option could be to create a new company to take over that business of that partnership firm. So it all depends on the case and circumstances of each particular situation, and depending on a review of a lot of factors associated with that business, we advise our clients which option is more suitable to them. There are a lot of factors that we consider, which I cannot just I may not be able to give you insights about all those options, which as a professional we analyze and we check before we really conclude which option is best suitable for you. But definitely you should consider. I have seen many a times, like converting is the option because you have accumulated losses. Many a times conversion involves unnecessarily cost and expense, and we do the slump sales. So a lot of different, but one answer is clear, that you should, if you're a startup, you can see your future. If you're committed and you can see that you were able to achieve something good and you will be able to raise fundings in future, get yourself into a private limited company.
Right, sir. Right. So I'll connect with you separately, sir.
Yeah, sure. You can.
Right. Thank you.
Any other question?
Sir, I have one question. Hello.
Yes.
How the patent valuation is done, sir?
Okay. So patent is an intangible asset. So mainly in case of intangible assets, there are multiple ways of, identifying the value. One could be the relief from royalty. So for example, you have some intellectual property, you know the formulations, and I want to use that formulation and make a product and sell that product. So what I would do is, I would be paying a royalty or license fee to you to be able to do that. Or if I own that patent, I do not need to pay you royalty. So ultimately, what that patent is doing to me is saving me the expense of royalty, on my turnover. So there is a method in which we actually check the similar kind of technologies or similar kind of patents, and how much how much royalty those kind of technologies might be commanding. There is an international databases which we can compare. So accordingly, we can calculate the value of that particular intangible asset. And there are many other methods also. Meme method is there. So multiple periods we compare the earnings of the organization in different scenarios, and then we do the valuation. But yes, of course, the patent can be valued. Patent as an intangible asset can be valued, and a lot depends upon the marketability or usability of that patent. Sometimes we have seen that many times a patent is there, but that patent is commercially not viable, or that patent is could not be commercially exploited, or it was never exploited commercially. Versus there is a patent which is commercially viable, which is being used by the company, or which is saleable, or the similar kinds of technologies was saleable. So accordingly, the valuation is done by the valuers. We do the valuation for these kind of assets. So there's a a model which gets created, and accordingly a value is derived.
Rajiv sir.
Yes, sir.
Sir, really here the patent management.
Your voice is not very clear, sir.
What is you told here now? Your patent portfolio management for evaluation of the company. Okay. But here our startup, in case of startup, what I seen and what I am experienced, they have their own findings, own innovations, which are patentable by themselves.
Bilkul. Yes.
And here we are not allowing, but we are not much interest, just like other companies, like pharma company or textile company or any other manufacturing company. What happened? They are acquiring this patent, acquisition of patent.
Yes,
okay.
Yes.
During acquisition, they are evaluation started for this patent, particular patent point of view. But in case of a startup, what we are mentoring, their own intangible cheats, their own patents. Okay. They are not getting from other, because they are innovators.
Yes, yes, understood.
They are innovators. In case, how we will evaluate? Suppose a company, startup company, is having good innovation, but they are not having that patent. Their innovation, that they are doing their business. They are not. Sometimes there are some startups are not interested for patent. We are making them say, "Bhai, you take your patent. You take your patent."
Okay.
Such situation, how will you value?
Yes.
For a company, startup company of their own innovation and their own patents. But any methodology is there?
Yes, yes, that is what I'm telling you, sir. Normally, the patents need to be valued most of the times when we self-generate it. So maybe the cost of generating that patent might be negligible as compared to the value or usability of that patent. And maybe today you are not able to utilize or exploit that patent to the level it can be.
Yeah.
So for example, you are able to generate something very wonderful, but you don't have the resources available to be able to commercially exploit that thing to that level. But if that kind of setup is created, that particular technology, that particular formulations is capable of becoming very big. So in those situations, we create a deeming fiction. We make some assumptions that what is that this patent is capable of, what kind of cash flows this patent can generate.
Yeah.
Suppose, for example, I am doing a manufacturing.
Yeah.
I am doing that manufacturing from a particular process, and you have invented that this particular process could be done in a different way and will cut down my costing by, let's say, 10%. So maybe you are not the manufacturer, you are not manufacturing, but you have somehow created that technology which can help me cutting down my cost by 10%, for example. So you know that how many people are there in the same industry to whom you can market your technology.
Yeah.
You can probably have a royalty agreement with me. You will say that you are the manufacturer, I will give you this technology, you use my technology, you pay me a 5% of fee, and then you can use my technology and I would be happy to pay you. So
this prospect of what you are telling, sir, explaining now, a technology or innovator will sell his own patent to other companies.
Yes. So when you are going to sell this patent to another company, that other company will either use it for their own operations.
Okay.
Or that company will exploit that patent by giving it on royalty to others. This is what they will do.
But sir, my thing is here. My question is here. I will not sell my patent. I am an innovator. I am doing my startup business.
Yes.
That's why in that way, how it will be evaluated for the company.
Yes, but you want to evaluate your patent, na? So in case you want to evaluate your patent or any asset that you want to evaluate, you have to think what could be the way to exploit or generate cash from that asset. Yeah. Even though you want to own it, like, I have some asset which I do not want to sell. I want to retain it forever. Yeah. But in case I have to value it, I have to, if I have some jewelry, I have a sentimental value, I'll never sell it. But in case I want to evaluate it, I would need to see what is the value of this jewelry to an outsider. Yeah. This is how I will evaluate. So you have a patent, you might not want to sell it, but you want to evaluate your patent. So you have to imagine how your patent can be useful to you or to a potential buyer who will buy it. You have to just imagine. So if a pharma company or if a manufacturing company would be your buyer, they would buy your patent. What they will do? They will either cut down their costing by this much. They will either be able to improve the quality of their products, or they will be able to create a product which will have a ready market. So what all is required? So those kind of assumptions are made, and then accordingly we can find out what could be the the cash which this patent is capable of generating, and that could be allocated as the value for this patent. So a lot of assumptions are made, and accordingly the value is calculated.
Sir, that means one message should go to our startups. If their innovation is marketable and industrially applicable, and they can generate good money out of it, they should go for patent, which will be add on to their valuation of their business. So this
yes, you have rightly raised an important point, and here I would want to highlight to the startups that don't consider the value of any asset that you create from the perspective of what you can do with that. Look and think of what any potential buyer can do with your asset. So your technology, maybe you are not able to create a big product out of it, but is capable of becoming a big technology, and somebody might be able to create a big product out of it. Think about that as well.
Yes, sir. I got it.
Because somebody will buy it cheap from you, will make it big, and then you will think over that, this was my technology, this has become so big, and I did not know that, this technology could have been, expanded to this level.
Sir, for example, here, one of our innovators might be present here. Mr. Patil, you are present here? banana fiber extractor?
Yes, sir. I am here.
Sir, he has developed one machine. It's unique in nature, and this is very high demand also in the market. But now he don't want to divulge or dilute his design in the market. He want to commercially exploit for himself first. Okay. He only sell the machine to the others without sharing with anybody else. Only the company will produce that machine because patent right that they want to. So in this perspective, when you go for evaluation, what you told, how others will use your patent, that way you will evaluate. So in this context, how will you evaluate it? Sir, you are getting my point? Rajiv
Yeah,
sir?
but voice was breaking in between, so I could not understand fully. But I understood your point that the startup has a patent technology which they want to use by themselves. They are
Yes,
not.
yes, sir. They only want to sell their product without divulging his patent to anybody.
Yeah, that's perfectly fine.
Okay.
Sir, I have a small doubt about.
Madam. So in this connection, how will he evaluate his business? How will he value his business? कैसे valuation उसका business को करें? How will do it? Any methodology is there or any assumption, anything is there so that we can project tomorrow that Mr. Partly business is a very good high value business.
Sir, when we will do the valuation of that business, of course, a lot of the factors which I just discussed, the qualitative and quantitative factors, will help in building a business case. And the stronger is the business case going to be a justifiable business case, the stronger would be the valuation. Okay. If the business case is going to be the weak business case, then the valuation will not be very high. So depending on how strong business case we can build around that particular technology or innovation that we have, the higher would be the valuation. When we do the business valuation, we do not value the intangibles separately, because the value of business itself includes those intangibles. The business case incorporates the exploitation of that technology or patent itself. When the technology is the key and the technology is getting sold, then that technology can be just valued the way I just explained, that how bigger the market, the addressable market is for that technology, and how good that technology is, and if there is a possibility of commanding a particular royalty for that technology, that could become a base. Or there are other parameters depending on that particular case which can help us value that particular technology.
Yes, sir. Okay, we will go by case and in other time. Okay.
Yes.
Because sir, after this 5 lakhs or 25 lakhs investment, this is a grant in aid. When we go for other investment, at that time, the valuation is very important, because who will coming to invest this is money in this fund, they will ask for the valuation of your business. They are asking.
Yes.
Okay. At that time, we have to discuss with you case by case, and we have to make some assumption and some of the theory, and should we calculate, and we will give that investor, right, this is the valuation of my company.
Yes.
Right.
Yes.
Okay, sir. Thank you. और मैडम कुछ पूछ रहे थे आप?
Sir, I have. Can I ask the question, sir?
Yes.
Yeah, this is about my problem, sir. That is, I'm actually experienced in natural dyes from the last so many years, and we have worked on actually direct printing of fabrics with natural dyes, and which is not there in the traditional system. And so, in that case, I have also helped one of the student, to do this particular thing, and she has successfully come out of it, PhD student. And now, we have requested her to go for the patent, and it is now they have filed a patent on it. And I would like to take that license from the university. It comes under the university, and so can it be considered under the startup? That's what.
Okay. So of course there are, if your project seems to be innovative and your project is a new project, so definitely you would be eligible to register yourself as a startup.
Okay, and do you think that the student should also become a partner to me because she doesn't want it, and also she's an employee of the university and she's not allowed to? That is the problem.
Yes, that is a separate issue. If any of the the partner director of your company is bound contractually or out of the the education curriculum they are attending to, they cannot become part of any business, then that may create complications at those places. So that's contractual issue with those places. It is advisable to have only those people involved as a director who are who can legally get full time.
Yes, sir. Legally.
Yeah, legally we can take the license from the university.
Yes.
So because even though we know the process, but we want to be ethical in life. So
yes.
Yeah, we'll buy that.
Tomorrow,
thank you, sir. Thank you.
Tomorrow they will lodge a complaint so that.
Yes, sir. That's why. And that not only that, sir, whether they complain or not, but I think when we teach and we have to be ethical in life.
Yes.
So that is my way of life or style of life. Thank you.
Any other question, or we'll come to an end? Startups. Anybody any question? Asking any question to Rajiv sir? Kindly on your video so that we'll take a click. Please, everybody should on your video, please.
Rajiv ji, can you please stop sharing your screen? It will be a full screen. Hello, Rajiv ji.
Yes.
Stop sharing your screen.
Yes.
Yes, that will be good.
Very good. Others should show your video, please, quickly, without wasting much time.
Hello, sir. Host will be stop it, sir. Video.
Any other person? You just show your video, please.
Sir, I have a problem here, and I think it is stopping from your side.
Now you are opening. Now you are opening.
Yes.
Okay. Thank you, Rajiv sir, for your very lucid and a very exhaustive lecture, but it has no ending actually. It has no ending actually. It is not a 45 minutes, 1 hour lecture. But sir, now in future we will take your help to the proper manner, so that we will get benefited, because this lecture will help us in the evaluation of their technology and further investment. That is very important. Further investment. Because same way in fast code we are trying for a investment by outsider, but immediately the investor told me, what is the valuation of your business? Okay. He asked me, what is your valuation of your business, of your startup?
Yes.
So thank you, sir, for your giving us time. And really it is add-on to our building our nation by promoting our agri startups and igniting their mind with the business ethics as well as business acumen. Sir, looking forward your help in future. Sir, very much thankful. And all the startups who have attended and others who have attended this lecture, I thank on behalf of R-ABI of CIRCOT for attending this lecture. Okay.
Thank you for this opportunity, sir. Thank you.
Thank you all.
Thank you so much, sir.
Thank you.
Thank you very much.
Okay. Bye bye. Go for lunch. You people are hungry now.
Yes, sir. Thank you very much.
Thank you.
Thank you,
Thank
Rajiv.
you.
Thank you.